Right, now we have the Johannesburg Stock Exchange, which of course is the largest player in African markets, the greatest liquidity, although as Nick alluded to there a moment, it is getting competition because these other rival exchanges have all been given licenses. The question of course is what will happen and whether these other guys will amount to much. The company itself though has done well. We're looking here about a market cap of around 11 billion rand, a price to earnings ratio of 13.8 and a dividend yield of 4.4%. When I say it's done well though, it once hit a share price chart of 180 or thereabouts.
Correct.
And it's now back at 130.
So it's pulled back a lot, and why is that?
Yeah.
Where all these other exchanges offshore are doing so well, why is this exchange in South Africa being Africa's biggest exchange, in fact the 18th biggest exchange in the world? Which is pretty something important to talk about. The issue here is volumes have really started to come down for the business, specifically in this year. I mean, you'll see that share price pullback really started in 2017, and the main reason for that is, remember, these companies earn their money through the volume that is traded through their exchange, and that has a knock-on effect.
Which part of the volume went down? Was it bond trading,
equities
trading,
specifically,
equity derivatives trading, or just equities?
Generally just equities, and why that's important is that the knock-on effect means, well, if there's less trading going through, there's less settlement going through. Remember, you charge money on settlement. There's less reasons to have a look at your BDA account the whole time. Your broker-dealer accounting system, they charge money on that. There's less interest in getting data for the indices. There's less money charged on that as well.
And was that a function of just poor equity market performance, or is it a certain amount of offshoring going on? So we lose SAB Miller, people can buy AB InBev, but they can also do that in London?
But reading between the lines, it seems to be the general concern of the stability of the South African economy and the South African
like
political
foreign
system.
Investors, for example, coming in and doing purchases here and doing the settlement locally and so on.
Correct.
That's been lessened as well.
So if you look at South Africa as your typical EM, emerging market, compared to other EMs that are available, maybe they're looking at things saying, look, growth's not looking so great here, political system's a bit unstable at the moment, maybe we should rather do some of our trading elsewhere. In Turkey as a bad good example, you know, as another emerging market, or Brazil, which has probably seen a massive increase in volume. So that's affected the JSE on that side. The other real factors, of course, the competition is real here. I mean, here we have legislation that's being passed at the moment called Twin Peaks. That's when the Reserve Bank and the FSB will be taking a much more a direct role in regulating the market. Remember, the JSE is a regulator themselves. So you've got the only exchange with the only settlements and custody area, with the regulator being themselves
so
as well.
The best of all worlds up to date.
And
it's done a great job, but it's arguably been a little bit fat, happy and lazy, and as a result has made better money than it perhaps was due. And now in this changing environment, the real question investors are asking is, can it continue to make such good money? And the answer is, well, maybe,
that's a great
not.
question, because within there is hope and potential. You know, I mean, of course, Nikki upstairs there looking down upon us is obviously seeing what is happening, and they've done a lot. I mean, one of the biggest costs of the JSE is the retention of their staff through share incentives and so on. I think that's about 40 to 50% of their entire cost is spent on that.
They've pared that back. They've reduced
They've actually had to,
they've
unfortunately, retrench. I can't remember the exact figure, but was it as much as, I went into the hundreds as far as I recall. That's a lot of people. Obviously, there are other avenues to create revenue for the business. I think the way that the South African market is going, this is what you and I spoke about when we spoke about Signia, is a much more passive approach through index funds and ETFs. That requires a lot of data to be used in order to create those funds. The JSE can get money on that. So I don't think the JSE is going to subside. It's still going to be the dominant player in our market for many years to come.
With the index business, as you indicated, they are creating those JSE indices, which people then use, as
so
you say,
within
for the
all of this competition, there is potential, and I think that's what we need to look through. So not for the faint heart, but I'll actually be okay. So at these levels, I think it's definitely worth a look. So I would start getting my feet wet and be hot on the stock closer to the 120 Rand level.
Okay, just for the sake of being slightly contrarian, I'm going to say not hot and wait and see how it does in terms of the following 6-month period.
Thunderbolt.